Have you ever had one of those days where it feels like the Forex market is just personally out to get you? Well, what if I told you that the very strategies you've been taught are actually leading you straight into the traps? Today, we are going to pull back the curtain and show you how institutional traders really see the market. And, more importantly, how they actually move it. So first up, we're going to expose what the source material calls the retail trading trap. Then we're going to completely shift gears and teach you how to think like an institution. And trust me, this is where the big light bulb moments are going to happen. After that, we'll pinpoint exactly where the money hides and give you this super powerful entry technique called the ICT order block. We'll put it all together in a live anatomy of a trade and then cap it all off with your first assignment, a 1-month mission that's going to completely change how you see the charts forever. All right, let's dive right in with Section 1, the retail trap. And just look at this subtitle, Why New Traders Have an Advantage. Sounds kind of backward, doesn't it? But the whole idea here is that sometimes knowing less is actually more. See, brand new traders, well, they haven't been brainwashed yet into seeing the market in a way that makes them a predictable, easy target. So let me just start by asking you a pretty mind-bending question. What if all those patterns you spent months, maybe years, learning to trade, those head and shoulders, those double tops, what if they aren't signals for you to trade, but are actually targets for them? The source calls all of these classic retail techniques distractions. Now, that's not to say they're wrong or useless, just that they're distractions. They're almost perfectly designed to pull your focus away from the one single thing that actually drives the market. Okay, so if all that stuff is just noise, what's the actual signal? Well, that brings us right to Section 2, Think Like an Institution. This is where we learn the one concept that, according to the source, is a total game changer. It changes everything. This slide, man, it just lays out the whole mindset shift perfectly. While retail traders are all busy looking for chart patterns and drawing trend lines, institutional traders are asking a much simpler question. Where are the orders? While retail is focused on support and resistance, institutions are hunting for something called liquidity pools. It's a completely different language, a totally different game. And that brings us to the absolute core concept, liquidity. Seriously, forget everything you think you know. In this context, liquidity is basically rocket fuel. It's just this massive collection of stop-loss orders that are all sitting just above recent highs and just below recent lows. But here's the real kicker. The source argues that price is actively, and I mean engineered, to hunt down these orders. That's what makes the market move. So where is all this rocket fuel hiding? That's what we're going to cover right now in Section 3, Where the Money Hides. Get ready, because you're about to see just how easy it is to spot these liquidity pools on pretty much any chart. You'd be shocked at how simple this is. You're just looking for the most obvious levels on the chart. Places where the price has hit a ceiling or a floor a couple of times. We call these equal highs and equal lows. You just draw a line above those highs, that's a pool of buy stops. Draw a line below the lows, that's a pool of sell stops. That's it. Those are your targets. And please don't overthink this. The creator of this whole methodology, who goes by the Inner Circle Trader, or ICT, he puts it this way. Literally, a 5-year-old can see it in the chart. The point is, these aren't some secret, hidden levels. They are hiding in plain sight. Okay, so we know where the market is likely going. We've identified the target. But how do we get on board the train? Well, that's where the ICT order block comes in. Think of this as your high-precision entry ticket. So what in the world is a bearish order block? It's simply the very last up candle right before a big, significant drop. Think about it like this. As all the retail traders were excitedly buying, the institutional smart money was quietly selling into all that strength. That one specific candle becomes a hot spot, a super sensitive price zone that we can use to our advantage later. And here's where the magic really happens. Instead of chasing the price as it's falling, you do nothing. You wait. You patiently wait for the price to come all the way back up to the low of that order block candle. The moment it touches that level, bam, that's your trigger to go short. It's an incredibly precise, low-risk way to enter the market. All right, theory is great, but let's see how this all comes together in the real world. In Section 5, we're going to dissect a trade step by step using a fantastic euro/dollar case study from the source material. Okay, so here's the pre-flight checklist. The overall mission, attack the pool of liquidity sitting down below. The specific target, all those sell stops resting just under that pair of obvious equal lows. The entry trigger, We wait for a pullback to that bearish order block we found. And the goal? Not just to hit the lows, but to smash right on through them. And just look at the precision here. The entry was planned down to the exact pip, 1.1891. The target was calculated at 1.1864. See, this isn't guesswork, it's surgical planning. And what was the anticipated profit for this surgical plan? A clean 27 pips. That's more than enough for a really solid, high-probability scalp trade. And the result? It was a flawless, zero drawdown entry. That means from the moment the trade was put on, it was never in the red. Not even for a second. This is the ultimate proof that this style of trading isn't about chasing price. It's about having the discipline to let the price come to you. So what do you think? Are you ready to start seeing the market through an institutional lens? Our final section is your first assignment. It's time to take these ideas and start putting them into practice, all without risking a single penny. Okay, here is your 1-month mission should you choose to accept it. Pick 1 or 2 major Forex pairs, like the euro/dollar. Stick to a 15-minute time frame, and your only job for the next month is to identify and mark every single visible equal high and low that you see. Label them buy stops or sell stops. And then, just watch. And I absolutely cannot stress this enough. Do not place any trades. This is purely an observational study. It's about rewiring your brain to see the charts differently, not about making money. Not yet. And that just leaves us with one final lingering question. Now that you know where the market is likely engineered to go, how will you ever be able to look at a chart the same way again? Welcome to the institutional mindset.